What's going on YouTube? I'm your mentor Arkhamtrades, and in this video I'm going to give you guys the exact model and framework that allowed me to turn $150 into $40,000 mastering smart money concepts. In this video I'm going to break down many factors like daily bias, higher time frame analysis, and lower time frame executions, and make it very simple even your dog can understand. Before we begin, make sure you guys leave a like on this video. It only takes 2 seconds and it greatly supports the channel. Thank you. A month ago, I talked about in the free Discord community how I was able to turn $150 funded account all the way up into $40,000 worth of capital from April to November of 2024. And I gave you guys the 4 key lessons that I learned throughout 2024. And as you can see right here, this is a funded account, about 183 trades placed with a 56% win rate, 73% day rate, as well as a 2.25R multiple with a 90% sales score. And inside of this video, I'm going to give you guys the exact strategy as well as the exact frameworks that I looked for on a consistent day-by-day basis to actually achieve those results. So you guys not only learn from this video, but can also backtest it and put it into your own trading. Hopefully you guys can see similar results. And if you guys want to join the free Spark Trading community, we do have a free course by my brother Spec Trades as well as myself, for completely free. And if you guys do want to join the VIP, it's only $47 a month. You guys get access to daily live trading with me and my brother Spec Trades, as well as 100+ hours worth of additional courses, lessons, masterminds, as well as weekly webinars where you guys can ask questions and we can answer you guys in real time, as well as going over the weekly outlooks. And if that's something you guys are interested in, join the Spark Trading community, you guys can join for completely free. That's going to be a first link description. Now let's get into the video. So the 2 things that I utilize every single day inside of my trading is the market maker models as well as the candlestick anatomy theory. And if you don't know what that is, don't worry, I'm going to break it down exactly, starting with the market maker X models. So inside of a market maker model, we have 3 phases. First, we utilize the market maker buy model, where as we can see prices continue to make higher highs and higher lows. And then we have the smart money reversal. This is where we enter a period where the marketplace can no longer continue higher and we can see a drop lower, going into the 3rd phase, which is now a market maker sell model, where we're creating lower lows and lower highs. And the main focus that we want to pay attention to when it comes to identifying whether we're in a sell market or a buy market, we have to pay attention to the smart money reversal. And the smart money reversal is categorized as a position inside the marketplace where we can no longer go higher or where we can no longer go lower, creating this reversal point, and it usually stems from the higher time frames. And we want to focus on these 3 patterns. So on the daily, 4-hour, or the 1 hour, we want to pay attention to any fair value gaps, rejection blocks, as well as order blocks inside the marketplace, to where we could potentially see a level of support being found where price can come down into either one of these 3 key levels, either on the daily, 4-hour, or 1 hour, find support to push higher, or this could be utilized as a level of resistance where once the marketplace reaches back up into, it could be utilized as a smart money reversal to then seek back lower prices. So when we're anticipating a smart money reversal to form, it has to be within these 3 time frames, and it has to be in alignment with either a fair value gap, rejection block, or a order block. This is the key signatures that you want to look for when it comes to timing these markets. And obviously after price gives a reaction followed by this breaker structure on the higher time frames, we can now validate this as a strong level inside the marketplace, and any previous highs inside the markets will be seen as liquidity. So once we get the smart money reversal followed by this break, we can now utilize the lower time frames like the 15 minutes, 5 minutes, and even 1 minute. We can utilize those lower time frame fair value gaps and order blocks as levels of support for a market maker buy model reaching back above previous highs, or we can utilize it as levels of resistance for a market maker sell model reaching back below previous lows. We're going to break it down even further on the charts, but this is just a general overview of what is the market maker models and how we utilize them inside the marketplace to gather our analysis. Now we want to talk about the candlestick anatomy theory. The candlestick anatomy theory is simply just utilizing a higher time frame candles open, high, low, and close into a lower time frame structure. So obviously we can see we have the opening price of this candlestick here, then we see this drop lower. So this drop lower would then create our market maker sell model, reaching back down lower and lower prices until price reaches down into a specific level to where we can anticipate a smart money reversal. And as we can see, price taps into this smart money reversal point, like we just mentioned, either on the daily, 4-hour, or the 1-hour, rejection blocks, order blocks, or fair value gaps, price finds support at that level, and then we get this breaker structure to the upside, going from now a market maker sell model to now a market maker buy model, respecting this previous low, breaking structure to the upside, reaching back above higher and higher and higher prices. And the candle that we want to be looking at is we want to be looking at the daily candle. So this higher time frame candle will be referred to as our daily candle, and this opening price will be referred to as our midnight opening price. The midnight opening price is at 12 a.m. EST, Monday through Friday. And how you would frame a bias is very simple. Let's say we have an order block at these lows. Okay, we can see that price opened up and we're seeing a drop lower, but we have a higher time frame order block. Let's say it's a 4-hour order block. So as we're reaching lower, this would then be referred to as our manipulation phase, where price will open up and see a manipulation to the downside to tap into a level of support. So once price taps into this support here, I want to then be bullish, right? Because I've identified this as a higher time frame level of support and I'm anticipating a bounce from it. So once I get this internal breaker structure to the upside, this is now my clarification that we opened up, saw this drop lower into this higher time frame level of support, and now we're seeing this bounce higher. We're now going from a market maker sell model to now a market maker buy model, reaching back above higher and higher prices. And as price gives pullbacks, I want to long into my position in either fair value gaps or order blocks on the lower time frames like the 15 minutes, the 5 minutes, and the 1 minute time frame. Keeping things as simple as possible. And if that went over some of you guys' head, that's completely fine, because I'm going to go into the charts and show you guys the exact trade that I took today using this exact model that made me and my brother a little over $2,000. So we're looking at the S&P 500 here on the daily time frame, and the first thing that I want to take note of is obviously this order block at these lows. During the live trading with my students, I talked about this order block level, how this was a potential level of support that price was coming down into to potentially find some type of bounce to reach back above higher prices. And how I identified this as a order block level was very simple. After we get this strong displacement, this is my indication that most likely smart money created this move higher, right? Retail traders are not creating a move higher that pushes up over 300 points. Most likely it's big institutions, large banks, and hedge funds that are moving these markets. This last out close candle, which is our daily order block, will then be my indication as a potential support level where there's most likely orders at, as well as we can take note of these previous lows, which we have taken out. So not only have we tapped into a order block level on the day time frame, which we talked about, but we've also taken out a level of liquidity. This order block level here on the day time frame would then be referred to as my potential smart money reversal. So we can see we had this reversal at these all-time highs, then we had this drop to the downside. We had this market maker sell model, reaching back below lower and lower prices, all the way down up until we got into this daily order block. Now that we're inside of this daily order block, I want to see if we can establish some type of low inside of this level to then potentially reach back up higher prices. Well, as coming lower inside the market phase, we did leave multiple areas of inefficiencies. We have this fair value gap up here, as well as we do have this fair value gap right here. So obviously we left multiple levels of inefficiencies. So once price taps into this level of support, finds some type of bounce, I want to see price give some type of push higher to fill in those inefficiencies before potentially going lower or seeing a reversal. Now we're going to go down to lower time frames and I'm going to deep dive even more. Now I'm on the 15 minutes time frame, and it's on this time frame I can then utilize the candlestick anatomy theory. So we have this daily candlestick to our right, and we have that midnight opening price right here, where we can see price opened up at around 12 a.m. EST, and so far we are below that midnight opening price. Like we mentioned, if we're anticipating buys inside the marketplace, we want to be buying below that midnight opening price, right? If we can get a position below that midnight opening price, this gives us the highest probability opportunities for if we were anticipating a reversal from, obviously in this case scenario, a market maker sell to a market maker buy model. This would then be a very good setup, reaching back above higher prices. My main emphasis throughout this whole thing is obviously we're at this daily order block, right? That's exactly what I told my students this morning inside of the live trading, we're inside of this daily order block level. We've already seen this movement to the downside from the London session right here, and now we've tapped into a higher time frame level of support. As well as we can see, we did get this internal breaker structure to the upside. Following that internal breaker structure, we created this last down close candle, which is in the form of a 15-minute order block. This is an order block because this was the last down close candle followed by this strong momentum to the upside, as well as we are inside of still that daily order block level. So when it comes to validating order blocks, fair value gaps, or rejection blocks, it's very important that you have narrative behind it on why price should hold. Price should hold inside of this order block level because we're anticipating price has found a low at this higher time frame range, and then it gave us this expansion to the upside. So once price comes down into this level of inefficiency, it should hold as a potential support level on the lower time frames and then give us a bounce, reaching back above higher prices. This is how I'm able to frame a bias and position myself inside the marketplace every single day. I focus on what is the higher time frames doing. Are we in a higher time frame market maker sell or higher time frame market maker buy model? Obviously, we were in a higher time frame market maker sell model. Now that we've tapped into that daily order block level, I'm anticipating this low here inside that daily order block level to then create our smart money reversal to then give us into a market maker buy model. And obviously on the lower time frames, the only purpose of the lower time frames is to utilize it as a frame of entry. Once we tapped into that daily order block, all we're looking for at this point is just looking for a lower time frame breaker structure and utilizing a fair value gap or an order block as an entry. That's it. Most of your work needs to be done from the higher time frames, and on the lower time frames, just looking for a breaker structure, order block, or fair value gap. Keeping things very, very simple. And the last component that we want to utilize is obviously time. So I trade the markets between 9:30 to about 12 o'clock every single day. So 9:30 to 12 o'clock, this is the time period that you want to be looking for your setups. You don't want to be looking for setups 10 minutes, 20 minutes before or after. It has to be within that specific time range. The market maker model is very fractal. Market maker model can go from the daily to the 4 hour to the 1 hour to the 15 minutes, 5 minutes to 1 minute. We're inside of a 15-minute market maker buy model from this low, this higher low, and this higher low. Now I'm gonna go down to the 1 minute time frame, and we're gonna go even more for a 1 minute market maker model. As you can see on the 1 minute time frame, from that 15-minute market maker model, we have a 1 minute market maker model from this low to this low, and now we're coming down into that 15-minute order block level. I'd want to see if we can get a 1 minute break away from that 15-minute order block level, create some type of a 1 minute fair value gap or 1 minute order block to then come back down into, find a level of support to reach back above higher prices. The area where a lot of you guys mess up at is as soon as you open the markets, you guys go straight to a 1 minute time frame or straight to a 5 minute time frame without understanding what has the daily done, what has the 4 hour or the 1 hour done, what has the higher time frames done to justify a bias before you can go down to the 1 minute time frame. Because there's a lot of price action on this 1 minute. If you don't understand the higher time frame narrative, you're going to get lost and you're going to continue being unprofitable. You have to pay attention to the higher time frame narrative and only go down to the 1 minute time frame once you have that higher time frame conclusion. So now I'm on the 1 minute time frame. I'm only looking for longs, meaning the 1 minutes could look bearish all it wants, right? This looks pretty bearish. A lot of people saying, oh, 1 minute fair value gap, this looks bearish, right? But I understand the higher time frame narrative. I don't care about this bearish fair value gap. At the end of the day, I'm looking for longs because I understand that we're in a higher time frame market maker buy model. On the 1 minute time frame is going to create a lot of price action. But once we can get the proper price action we're looking for, which is this internal break higher, creating a fair value gap or order block, that's going to be the setup that I'm going to look for. The 9:30 is about to open up here. I'm going to let this play out. Let's see what happens. So as we can see, we kind of consolidated a little bit here, consolidated a little bit, and then we had this massive gap to the upside at around 9:45. Seeing this massive push to the upside, creating this fair value gap, this is where I framed my entry. When we have these massive fair value gaps inside of the marketplace, I like to split them up into quadrants. At this point, I took my entry at the 25% of this fair value gap because the 25% is a very reliable percentage that the marketplace usually always comes back down into. So as we're in a market maker buy model, price is now going to target opposing levels of liquidity, and those opposing levels of liquidity are now these previous highs. So I'm going to let this play out here and let's see what happens. You can see here price comes down into that fair value gap, right, tagged me in, and then we see this breaker structure to the upside. So from the low that tapped into this fair value gap point to this high here, I can go into my standard deviation, and we have a 0.5 standard deviation, a 1 standard deviation, a 1.5 standard deviation, and then we have a 2 standard deviation, right? You guys don't have to utilize standard deviations inside the marketplace. It's more of an advanced concept, and if I try to explain it in this video would be an hour long. So this is something that I utilize inside my trading to give me extra precision. And the reason why I use these positions right here was this was the high to low that tapped into this fair value gap. We have a level of liquidity above us, then we see a push higher coming back down into this fair value gap right here, right? This would then create our accumulation phase in the market maker buy model. So I would go from this low point to this high point, and then I'd be targeting the 2 standard deviation. We've identified our higher time frame range inside of this daily order block level. We had this internal breaker structure to the upside, away from it. Now we're inside of the market maker buy model, reaching back above higher prices, and let's see how this plays out. And as you can see, price comes all the way back up into that 2 standard deviation perfectly before then giving this retracement lower. Perfect. As well as price comes lower, tapping into this 15-minute order block level like we talked about, order blocks. We had this massive push to the upside. This last down close candle is now our order block. We have this 15-minute order block right here, and then we find support reaching back above higher prices, continuing even higher, just like so. So on the 1 minute time frame, we have this 1 minute market maker buy model, but we also have this market maker buy model here on the 15 minutes. From this smart money reversal, got this initial push, come down into that 15-minute order block, seeing that continuation higher. So the market maker model is very fractal across all time frames, from the higher to the lower time frame. And if you guys want to learn more lessons just like this, plus live trade with me and see how I do it in real time every single day, you guys can just click the first link in the description and join the Spark Trading community. Me and my brother are live every single morning, teaching, educating, trading, making money, helping you guys make money, hours worth of lessons, and much more. It's only $47 a month. We made sure to make it very affordable to where anyone can join. But before you leave, make sure you guys leave a like. It really shows that you guys really enjoy these videos. Subscribe if you haven't already, and turn on those bell notifications, and comment what you guys want to see next. I'm your new mentor, Arkhamtrades. Be safe.